Today we're going to be hearing from Olu Alabi, who is a passionate advocate for financial literacy and community development, community empowerment. He's a recognized leader within the experienced Black professionals, I think ERG's Enterprise Resource Group, I'm not sure, where he spearheaded the What's the Score credit education program, which reached thousands of students and equipped them with essential financial literacy. Under his mentorship, the team grew to 17 skilled facilitators, and he has played a key role in simplifying complex credit concepts for young learners. Olu's impactful work has earned him recognition as a top 10 nominee in the social impact category at the Investing in Ethnicity Awards. Olu is joining us from Experian, the credit rating agency. Thank you for coming, Olu. And we'll also be hearing from Felicity Okolo, who's an experienced insurance consultant dedicated to helping individuals and families secure peace of mind through the right protection solutions. She ensures her clients are adequately safeguarded from life's unexpected challenges with tailored insurance cover. She's a graduate of the prestigious Imperial College London and is also a transformational speaker and author, bringing both expertise and empathy into her work. With about 10 years of experience in the financial industry, she combines deep knowledge with people-first approach to guide her clients with clarity and confidence. Felicity currently represents Tavistock Protect, a leading UK-wide insurance intermediary with more than 25 years of trusted industry experience. And patiently with us from the very beginning is Stephen. So Stephen is from Vivid Financial Solutions. Stephen Babatunde is a regulated mortgage and insurance broker. He's a principal director at Vivid Financial Solutions, a company who are experts in providing tailored mortgage and insurance advice. He serves as a member of the board of trustees at Citizens Advice Scotland, and he's also an ambassador at Black Professionals Scotland. So there you have it. I don't think you get any better than this. Thanks to everyone who facilitated getting those incredible people to come and talk to us, because like the chairman has pointed out, money is something that engineer or not, we all worry about. So hopefully they can help us make the best use of how to end. So we'll be starting with Olu, and the floor is yours whenever you're ready, Olu. Thank you.
I think you should be able to share your screen now.
Okay.
Yes.
I still don't have access, but good afternoon.
I'll
Good
sort that
afternoon,
out now. Thank you.
everyone. Hi, my name is Olu Alabi. Dr. Kenichi has given a wonderful introduction to myself. So, as you all know, my name is Olu. I'm from Nigeria. I came into the UK about just over 20 years ago with my parents to study and stuff. So, since then, I've kind of had an interest in financial education, because I remember when I came to the UK, credit scores, credit cards, bank account. Literally, there was just so much information being thrown at you and stuff like that. So it it was a bit difficult, but we got there right at the end. So I'll be sharing my screen. Can everybody just confirm that they can see my screen, please? That'll be good.
Yes, we can.
Yes.
Yeah.
Cool. So yeah, like I said, when I came to the UK, this kind of gave me the idea to come and do this, i.e., a financial education to people. So 20 years ago, I was given a wrong financial advice. And that advice was that, don't worry, spend as much credit card you want. As long as you're a British citizen, they can't do anything. You can default all of them. Tell them you only want to pay £50, and that's it. And I did that. I paid for the consequences. But so I'm here to make sure that people are not making the same mistakes again. So like I said, yeah. So I studied economics in London. I've started on the Boot graduate scheme to be a store manager, and then later on, I moved to Nottingham in 2015 to the headquarters as a project coordinator. And a few years later, that I joined Experian as a project manager. And a couple of years later, I'm now in this cybersecurity. So it's nice. I studied economics, but now I'm doing cybersecurity. So I kind of I'm a global program manager. So we look after, my team is in different countries. So from Australia, India, UK, North America, Brazil, South Africa, Colombia, and it's always increasing. My hobbies is reading books, learning new stuff, and then always like trying out new food. Everybody loves food, so that is good. And my fair scale of height, but yeah, with God, all things are possible. That's what I'll say. So the session today, what we're going through today is kind of like a high level. What is a credit score? What is a credit report, and how it affects you? So this material has been shared to like possibly over 5,000 students across the country, even in North America also. So please, if you have any questions, like I said, save your questions to the end. But let me know if there's something, Bonnie. Just yeah, feel free to reach me on LinkedIn, or I'm happy to share my email. So I'll be going through high level overview of what's a credit report, what's a credit score, how does a credit score works, how lenders make their decision, and the cost of borrowing. So I've just got one or two questions here. So I know everybody's on mute here, but if you can put something in the chat. So when you first came to UK, what was the shocking thing about the bank system, credit cards that kind of like shocked everybody? So if we can just put that in the chat, that will be really great. So I just want to know, what was the one thing that kind of like shocked you when you came into the UK? Just looking at the chat here. Okay. Seems we've got a quiet bunch today, but that's good. All right, okay. While you guys are thinking about that, you can keep put in the chat while I go back to the deck. So what is a credit report? So I'm actually happy that I'm sharing this with a group of engineers. So the easiest answer is this here. So when you go to school, at the end of the year, you're given a report to say that you did well in math, okay in physics, you did well in science, and English, maybe you were, yeah, kind of like that. So basically, that is a credit report. That is kind of like a high level of a definition of a credit report. So a credit report is a report that tells you how well you've managed money in the last 6 years. So this talks about every single thing about your bank account, your loans that you've taken. It goes into very details of how you've managed money, where you did well, how many people you got loans from, how many people you paid loans on time, how many people that probably you had one or two missed payments. So your credit report is your financial reputation. So every time a bank comes to you, or every time you want to get a mortgage, for example, it is that report that they're going to see, and they're going to use that report to make the decision. And also, one of the key things we need to remember is that that report is a 6-year history of how you've managed money. So not just the last 6 months or the last 2 years, it's literally the last 6 years. And it goes into details month by month over the last 6 years. If you've missed any payment, or even if you overpaid, all this information are installed in a credit report. So when you need money, when you need a mortgage, when you need a loan, it is that report that the banks will use, or the lender will use to make a decision for you. And also, the credit report is kind of like like a normal report card. The higher you score, the more likely you're going to be accepted for credit, or for the loan, or for the mortgage, and the better the rate will be for you. So that's the credit report. So the credit report is the details, and then your credit score is the exact score that you're getting. So it could be 999, it could be 679, something like that. But the credit score is the exact score you're getting, and whereas the report is an history of how you've done well over the last 6 years. So also the credit score, it helps them in detect how you've repaid debt in the past and how you're currently managing your credit. So lenders like banks and credit card companies will look at your credit history, and they'll look at the information on your application from and any records that they have for a customer. So things that would affect your credit score are stuff like your credit account. So like, let's say you've got 5 or 6 different credit cards. They look at all those histories that would affect your credit score, and also like the average age of your account. So if you've had a bank account since you came to UK, I will always advise you just keep that bank account, even if it's £5, £10, even if you don't really like the bank because their rates are not too good, or you've tried different banks. Just keep that bank account, because it shows that actually this person has managed an account for over 6 years, for over 7 years, for a long period of time. And that's one of the things banks do like. They do like stability. Also, one of the things that could influence your credit score is your credit limit. So if you've got a higher credit limit, it shows that. So let's say, for example, let's say Barclays Bank has given you a credit card and it's £10,000 credit limit. So it shows that Barclays Cards trust you with that £10,000 credit limit. So the higher the credit limit, the better it is. But I never always advise people to spend on all the way to the credit limit. You can have 1 or 2 cards just so that you never spend over your credit limit. We'll talk about your credit limit, which is also your credit balance also. The credit account balances, so like that's all your bank accounts, your credit cards. So try and stay off negatives, overdrafts, because they're very bad for you. And also another thing banks will look at is the way you use credit. So whether you're always someone that's always going into overdraft, that could be a flag for them. And another thing they'll do is your credit applications, how many times you're applying for credit stuff. So I'm sure my colleague will tell you that if you're going to apply for a mortgage, I usually say between 6 to 10 months, do not apply for anything. Just leave your credit report the way it is like that. Don't apply for anything, because every time you apply for a new application, or it could be a new bank account, your credit score kind of decrease a little bit. Also, another thing you should be aware is that if you've got a high score, the banks will deem you as a low risk person. So basically what it means is that you've got a high score, you're low risk, so banks are more confident in granting you credit. So it could be a loan, it could be a mortgage. So high score means low risk. And then if you got a low score, it means you're a high risk to the banks. So we'll talk about this in the next few slides. So what information is included in your credit report? So stuff like your electoral roll, if you've got any court judgments or insolvencies, any fraud flags, any notices of corrections, any financial links. So i.e., if you've financial link is when you've applied for something with someone together. So it could be your spouse, or could be with a partner or a friend. As long as both of you had to financially sign that form together, both of you have got a financial link. Other information is like your previous names, addresses, and for the last 6 years, all this information are in your credit report. So what is not included in your credit report? So the outcome of applications. So if you've applied for, let's say like a loan or something like that, the outcome of that application is not on your credit report. But if you're applying for something, yeah. So let's say you're applying. Let's say you want a mortgage, yeah, and you've gone to 5 or 6 different mortgage brokers, and you've already done the applications, and they've already done the credit search. So bank number 6, they can see that, wait a minute, Olu has gone to 6 different mortgage brokers. Yeah, they don't know the outcome, but they can kind of guess that, wait a minute, it's gone to 6 different credit brokers. Most likely, they've not given him the deal that he wants, or they've said no. So guess what? He's a bit desperate. That's why he's going to so many brokers. So the outcome is not given to the to the brokers or that you want the mortgage from, but they can see how you've been doing well. So, and a lot of times the banks are like, wait a minute, this guy is desperate for mortgage. Maybe he can afford, maybe he's looking for a good deal, but we'll be cautious on that. So we'll come up to that later on. Another thing is criminal records. So criminal records are not on your credit report. So which is good. Another one is race, ethnicity, and sexuality. That's not there. And then finally, financial data about other people. So if you live in the same house with them, it's not in your credit report. But like I said earlier, if you sign the same form together, your co-signatures, that you're basically linked. So they could, if you apply for something, they could check for that person's applications also. So your council tax. So interestingly, council tax is not on your credit report. Streaming services like Netflix, Amazon, Spotify, those stuff is not on your credit report, and also your income and savings is not on your credit report. But Experian offers a product or a service called Experian Boost, and basically what this does is that your income, your savings, your council tax, your streaming services, all this extra information is added into your credit report, and that could potentially boost your application. Because at the end of the day, you've had Netflix, you've had Spotify, you've been using them for the last 24 3 years, and you've been paying on time. So that is another extra bit to tell the broker or the bank that actually I've had this relationship with Netflix or Spotify, and I've been doing well, and those little stuff can boost your credit report. So one thing we're doing at Experian is we're trying to bring in new sources of where people do interact with. So stuff like Netflix, stuff like Amazon, all those little stuff. You, as long as you apply for the Experian Boost, all those little and you're paying regularly, they can boost your applications. Yeah. Yeah, so that's just so, and also Experian Boost is free. So just a shout out there. So at Experian, the credit score rates from, we've got 5 bands. So we've got very poor, fair, good, excellent. So those are the 5 bands. So earlier I told you that if you've got a high score, you've got a low risk. You've got a low score, you're a high risk. So what does that mean? So basically, I'm just going to quickly go through the slide as possible. So if your score band is excellent, i.e., you're 961 points and above, you've got an indicative 2% bad rate. And whereas if you've got a very poor score, that means your score is less than 560, you've got a 66% indicative bad rate. So to everybody in the room, I want us to kind of like flip our heads and just imagine you are the bank. 2 people come to you. One person has got an excellent score. 2%, so there's a 2% chance that they won't pay that loan. Let's say £1,000 loan. And the next person comes to you, there's a 66% chance that they won't pay that loan. Who are you most likely to lend the money? So I am pretty sure everybody here will most likely lend the money to the people who are 2% less likely not going to, because 2% is actually 2 in 100. So there's a 98% chance that you get your money back. So most of the banks would lend the money there. But the good news is this, right? We've got different banks, we've got different lenders in the UK. So all the banks and all the lenders, they all operate with everybody. So if you've got a poor score or a good score, a fair score, you would find a lender. They may not offer you the exact money that you want, but there is chances and possibilities that you will find that lender. So I think for me, this is probably one of the most important slides. So, and I think possibly in the following slides, I want us to think I want everybody here to think as if you're the bank, as if you're the one lending your money out, because I guarantee you that everybody in this room, if you're lending someone £100, at least you want your £100 back. If you get £101, £110 interest, that's not bad, but at least you want your £100 back. So at the end of the day, that's the way the banks thinks. So, and then the big banks, especially in UK, the Barclays, the HSBCs, they operate in, this is where their clientele lies most of the time. So what really affects your credit score? So just going to quickly go through this, because I like to talk about what doesn't affect your credit score, or what could affect your credit score. So having a credit limit of over £5,000, that is positive. So if you have a credit card, make sure that you can get a credit card that's over £5,000. That is positive. Having a mortgage account, also that is positive. But then the next one, using less than 30% of your credit limit. So like I said earlier on, so because you've got £5,000 doesn't mean that you should spend your whole £5,000 or you should be in £5,000. Just make sure that you're below 30% of that, your credit limit. Not applying for any applications, especially before you're going to make a big application. So if you're going to do a mortgage, if you're going to apply for a car, at least 6 months before that, do not apply for anything. Just leave your credit report the way it is there. Low or zero balances on credit cards. So personally for me, I've got 2 credit cards that physically don't know where these credit cards are, but because I've got zero balance on them, I believe it helps to improve my credit score. As long as you register to vote, this can also affect your credit score. And once again, no new accounts in the last 6 months. So those are the factors that affect your credit score. On the other side, looking at the negative factors. So these negative factors, they've got a huge big payment that affect your credit score. No less than accounts less than 6 months, that's fine. Having a missed payment. So having a missed payment is one of the biggest impacts. So some people say that the impact could be up to 50 to 100 points by just having a missed payment. That's how many points it can affect your credit score. Using over 90% of your credit limits, that's not good. Lot of applications in the last few months. So once again, like I said right at the beginning, if I'm the bank and I can see that, wait a minute, Olu has gone to 6 people for £1,000 and I'm the 7th person, I'm thinking, wait a minute, how come those 6 other people said no? So I'll be more cautious with that. Make sure you don't have any court judgments or insolvencies. And also the last one is default account. So I'm just going to quickly go to a default account. So a default account is when you have credit agreement with let's say you took a phone, for example. So you took a contract phone, 2 years contract, you're meant to be paying £30 per month. After 6 months, you're like, I don't like iPhone anymore. I want to go to Android. You stop paying. O2 or Vodafone, they chase you, Olu, come and pay. You ignore their calls, and then they put a default on your account. This is one of the biggest one. This could have up to 200 points on your credit report. So this can knock off, default accounts can literally knock off up to 200 points off your credit report. So what happens is, like, they now put it there on their account that we've chased Olu so many times, he didn't want to pay, so there's a default on his account, and this stays on your account for 6 years. So once again, just flip it again. I come to you, I want to borrow you money, and you're thinking, wait a minute, you defaulted on a £30 per month phone bill, but now you want me to lend you £1,000. How would you feel? Yeah. So please feel free to take a screenshot of this. I'll be sharing this deck after this, but we always focus on this, but I think we should always focus on these areas because these points are very big and it could take 6 years for them to fall off your account. So another thing I would just want to introduce, I'm sure everybody has seen this, so is the buy now, pay later. So this is the car now where you can buy trainers and pay over 3 months. So right now, in the last few years, it's been getting common and common and common. So right now, all the major credit bureaus, so that's Experian, Credit Expert, and TransUnion, they have data on this, but this data is not factored into the credit scores. So they've got the data on how people are spending on buy now, pay later, but it's not factored. So buy now, pay later is actually good. It can be good and bad. So I think it's good because if you're trying to build credit report, you're trying to build your credit, is good. And especially, to be honest with you, the other day I went to do my MOT and it was like £500, and I had the opportunity to split it into 3 months. So that was good. 3 months interest free. That was really good. One thing I just want us to do, we need to be financially savvy going forward. So one thing that's been happening right now, especially in America, is that you can buy pizza and pay over six weeks. I'm sure everybody here knows that pizza doesn't last 6 weeks. Even 2 days, 2 days, forget it. 2 days maximum. So once again, just think you're a bank here. You bought pizza over 6 weeks, paid for it over 6 weeks. You missed the payment. Now you want me to lend you £1,000. Personally, for me, I'll be like, wait a minute, you're missing payment for a pizza, which is £30, £40, £50, £1,000. Look at the difference. As the bank, I will be cautious. So that's why I said buy now, pay later. They're good, but as long as you make sure that you paid, because you just have to be cautious, because that missed payment could affect you buying that house or buying that car or getting a good deal in buying that car or getting a lower interest rate in those deals. Yeah. So how to look for credit. So just cautious of time. So there's so many ways to look for credit. So at Experian, we've got a solution where you go on a website, you say you want, personally, I want to use it for a mortgage because mortgages are very tricky. But let's say you want a credit card. It tells you, yep, you're eligible for this credit card. You're 100% eligible. Sometimes it even says you're 80% eligible. So by doing it this way, you don't even need to, well, you still need to apply for it, but you know that you're 100% eligibility. So this removes you applying for 10 different credit cards to see which one's going to apply for you or which one's the best deal. So this is just a one and quicker, easy way. And also this kind of helps to protect your credit score. When it comes to mortgages, in the past, I've always used mortgage brokers. I think mortgage brokers are the way forward. I'm sure colleagues will agree to that. So how a lender decides. So there's one thing that's called affordability. So basically what they do is like, they look at your salary, they look at your dependents, your savings, if you're getting any child support, your deposit amount, house price, expenses, look at every single thing that's together and say whether you can afford it or whether it's within your affordability or not. If they think it's outside your affordability, this is when sometimes the bank will say that maybe no, stuff like that. Some other things the banks looks at is the student loans. If you've got any student loans you've got, and any salary deductions. So sometimes we get salary deductions, not the pensions, not the NIs, more like if you're paying car through salary deductions and stuff like that. Other stuff is payday loans. So payday loans, because they usually try high interest rates, so it kind of gives the bank your past financial history. And the other one is gambling. So that is those are the kind of the two, payday loans and gambling. They're kind of like the two red flags that banks look the banks look like. We usually avoid people that if it's the application that you're going to submit, if it's the bank statement that you're going to submit, try and avoid gambling and payday loans in those paper applications. But now things are changing because everything is virtual, so they can still see it if you've got any payday loans and gambling. So on paper, these two things cannot and should not affect your borrowing or how much you can affect. But at the end of the day, like, how many people are there in this room? Some people are like, pay the loans, yeah. You gamble, yeah, I don't mind, I'll borrow you money. And other people's like, nope, you gamble, I can't afford you to borrow money. I'm going to borrow you £1,000. I want my £1,000 back. So the top refuser as a credit bureau. So yeah, the top refuser for credits, and what you can do. So number one is the credit score. So the credit score, your credit report. So if your credit score, credit report is too low, banks definitely will say no. Another one is a negative information. So if there is a negative information like a default or a mispayment, the banks could say no to that. So also, please don't forget that the different banks. So different banks have got different criteria. So the way that we've got over 15 people in this room, everybody has got their own criteria. Some people's like, you know what, I like risk, I'm ready to give you the list. And some people's like, nope, I give you £100, I want my £100 back. The other one is low or no affordability, which we've kind of talked about. And then I think that the last one is probably the most important one, which is the lender's policy. So every lender has got its policy. So some lenders, they want almost the people with the excellent perfect score, and some ones are kind of just ready to help you on the market. They're going to charge you a higher interest rate, but that is their policy, and that is what they do. So I think one key thing I want to put it here, that Experian never tells the bank yes or no. So what we do is the bank will come to us and say that, can you give us the credit report for Oluwalabi? And then what we Experian, what we do is that we give them the credit report. So this is all the information that we've got on this person. So the bank never, so we never say no to we never say yes or no to the bank. We just give them the information that we do. And also, all this is also computer AI these days. So everything is back and forth throughout the whole thing. So yes, also some other top credit myths that was flying around there. So all these are false. So I'm just going to quickly go to them. There's a credit blacklist. There's no credit blacklist out there. Previous occupants affect the score. Nope, they don't. Credit refusal damages your score. No, not certainly, but the more you apply for credit, that could damage your score. Credit agencies make lending decisions. So Equifax, Experian, TransUnion, we don't make the decision, we give them the report. Just imagine, like, yeah, we just give them the report on you. Your partner or your member could affect your credit score. So once again, no, only if you are financially linked together. So only if you have previously signed a contract together. So as long as you previously signed a contract, both of you have previously signed a contract together, that's when you're financially linked. Checking your credit report damages your score. Nope. I check my actually mine is on auto check. So if my score goes up, down, it kind of tells me. So that doesn't. You only have one credit score, so that's a lie. So Equifax, TransUnion, and Experian, those companies have a different way of calculating your credit score. So you could be 960 here and 950 on the other one, and probably 700 on the other one. So my advice is always to check all your credit score, just to make sure that you're keeping up to tab with everyone. And then the final one is your credit history stays forever. No. So that's also no. So 6 years. So your credit history stays with you for 6 years. So if you've got a default and you paid for it off after 6 years, the default will fall. So it's the last 6 years the banks, the lenders are care about. Just going to briefly go to this. So how to improve your credit scores. So build a credit file. Don't miss a payment. Catch up on any past or due accounts. Pay off any revolving balances, and limit how often you apply for new accounts. So that's kind of the end of my presentation. I know this has been quite a lot. I'm happy to share this with my with guys. Just want to quickly shout out that Experian does offer a free credit report. So if you just sign up on Experian, we do offer a free credit report. And there's another site, I think it's called Check My Report, that allows you to see your report from Equifax, Experian, and TransUnion. So yeah, cool. Thanks a lot, everyone.
Thank you very much, Olu. That was really impressive, and loads of information within a short time. I found that personally useful. We might take a few questions now. Please, we crave your indulgence to do stay till the end, because I would have a more wider Q&A session towards the end when we have heard from other presenters. But we can take a few questions in the meantime. If you have a question, please do use the reactions button to raise your hand on Zoom, and I will call you to unmute yourself and ask your question. In the meantime, you can also put any questions in the chat, and I will read them out. I've seen someone asked about the slides, and thanks, Olu has confirmed that he will share that later. I do have one myself. Why is it that if someone runs a search on you or your credits, this thing, at least that's what I've heard, that it negatively impacts your score?
No, so it doesn't impact your score. So if they do a search on you, it doesn't impact your score. I think that's one of the myths that people have got, but no, it doesn't impact. It's only when you apply for something. So like say like for example, you want a car insurance,
Mhm.
and then you go to the GoCompare.com, and GoCompare.com gives you like 6 different options. It's only when you apply for something, that's when your credit score drops. Yeah, it's only when you apply. So that's one of the reasons why we tell people do not apply for something, or don't apply for something 6 different times, because if you apply for a loan 6 different times, just imagine your loan actually drops. Your credit scores actually drops. I've forgotten how much exactly it drops, but I know that every single time you apply for something, your score drops.
Okay. I wouldn't start getting into the mathematics of why. I see Samuel has his hand up. Engineer Tochi, please go on.
Yeah, thanks, Mr. Olu. My question is very simple. I'm just wondering if there is any way you can actually get the credit details, or if you're applying for credit card and the rest of them and you are getting bounced, how do you know exactly what you're doing wrong? You might think you are doing everything right, but perhaps there is something they are targeting that you don't know. How do you verify the details to be sure, aside from looking at your credit score?
Yeah. So I think what my advice would do is that, like I said, so Experian's got a facility where if you want to apply for a credit card, it tells you you are 100% eligible. So Experian has got it, Credit Karma has got it, Equifax has got it. So what I would advise is that go to Experian site, see the deals they're offering you, go to Credit Karma, see the deals Credit Karma is offering you, go to all those different sites, see all the deals available, and then go for the best one. So I mean, if you have any other questions, feel free to approach me. I'm happy to share. Actually, I'll just type my email there.
Okay, thanks so much.
Right. Thank you very much.
If I can just input on that very briefly. Yeah, is that okay?
Yes, please.
Yeah, thanks, Olu. That was quite comprehensive. Just on the Tochi's question, I think one of the things I say to people when it comes to you looking for credit card, go into your current bank, speak to them at the desk and ask if they are willing to offer you something. Of course, what Olu had mentioned is quite a very good one that tells you 100% and whatnot. But I always say to anyone that is relatively new in the UK, less than 2-3 years, you don't have enormous credit history, go into your bank, ask if you are able to get credit cards. Some of them might offer you from £500. And if they could not offer you, before you end up on the search engine and living hundreds of soft print on your credit file, speak to your bank, hear what they say, and take that more or less like a gospel, unless you have a system that will give you a percentage acceptance number.
Yes. So that is very correct. Also, I think if it's 500 they're giving you, take that 500. Start with the 500, start to build it up, pay it off every month, because what they can say is that, wait a minute, we gave him £500, he's paying his back, he's building up. Actually, let's give him £1,000. So it's the history, because as soon as you're doing that, you're building up the history, and it helps you in the future.
Okay, thank you very much for those answers, both of you. I think we would have to leave it there. There's a question in the chat that we'll take later. Apologies, Benga, just in the interest of time so that we can hear from the other speakers. I do have to comment that when I started my credit journey, I think it was 150 or 250 pounds from Tesco Club Card, one of those supermarket ones. It just enabled me to build credit history, and I can say that the banks are willing to lend me a lot more than that now. But yeah, everyone can start somewhere. I was still a student then. So next we have Felicity. Felicity, if you're okay to go, please unmute yourself and do start your presentation if you have one. The floor is yours.
Hello, can you hear me?
Loud and clear.
Can you see me though? No.
Very much so. Thank you.
Hello, just to warn you, good evening, ladies and gentlemen. Do you have ladies here at all? Or just gentlemen?
We have lots of lady engineers, wonderful ones.
Brilliant. Good evening, ladies and gentlemen. Before I get started, just to warn you, I am in Lagos, Nigeria.
Right.
So if you hear any funny noise or light goes off, internet cuts off, forgive me. Yes? So, right. And Kelechi, you've already introduced me. Yes, you mentioned you introduced me already.
I have done that in the
Yeah?
beginning, yes.
Brilliant. Thank you very much. I'm going to get started and then we can take some questions at the end. So do you have permission to share? I'm sending a
Yes.
request for share. Share my
I
screen.
think you do. Let me just confirm that. Felicity.
You can share now, Felicity.
Yes, thank
I
you.
can share now? Okay,
Yes.
hold on. You can share. You see my screen?
Just coming up. Yes, we can see that now. Thank you.
I go to presentation. Slideshow. Yes.
Yeah.
So my name is Felicity Okado. Yes. So today I'm representing Tavistock Protect. It's the name of our company, Tavistock Protect. So we believe in protecting your tomorrow. We insurance and mortgage specialist. Insurance, basically, you know what it is. It covers your risks, protects risks. And again, here's more information about my name. I'm a speaker, coach, and author, financial advisor, and educator. We're going to talk about insurance to protect risk against life, health, legal expenses, business, house, car, travel, and the rest of those. So here's protection policy chart we have. We've got a provider on the top, the broker, and a client. Providers are companies such as Zurich, Aviva, Legal & General, Royal London, Vitality. So many of them you must have heard of. The brokers are people like us. Tavistock Protect, we're a broker company. And then people like you who take our products will be clients. So you can now take our products from brokers like us or from providers directly. So the question would be, why would you take our products from broker instead of the provider? Very good question. So the counter question I will ask you is, why should the provider pay us good commission, put products in place for you, the clients? I'll answer the question because they know that it is safer and easier for we, the brokers, to reach to the clients and explain products and services to you better than they could do. We brokers, most of us work weekends and evenings. They don't. We provide additional services for you that they don't. And also to the providers, I'll say you are my brothers and sisters. I'll tell you the truth. Sometimes you're just a number. While to us, you are actually person. We love you. We care more for you. Not that the providers don't care for you, but we have this additional, should I say, care cover for you. And also we spend time to explain products and services to you more than they will spend with you. And also they pay us good commission because if people tend to think insurance don't pay. People do not read terms and conditions. This insurance company trains us, the broker companies, on each of the products. So we read terms and conditions. Most clients do not. So we are the bridge to make sure the clients understand the products and services more than the providers will do. I hope I'm making sense. If I'm making sense, could you say yes in the chat for me? I like interactions. I can't see most of you. So if you've been interacting with me, if you understand what I'm saying, please put in the chat. Am I making sense? Just to make sense in the chat for me, please.
Lots
Yes?
of reactions are coming as well. We have lots of virtual
Brilliant.
reactions
Thank you.
coming.
Thank you. That's just the starting. So about us, Tavistock Protect, we have 3 arms. Tavistock Private Clients is a multi-award-winning financial planning firm providing services to predominantly high net worth private clients. Then the asset management delivers institutional quality discretionary portfolio management at a retail price, providing individuals with the benefits of collective buying power to ensure that portfolio management platform are dealings and dealing charges extremely competitive. Then we have Tavistock Protect offers clients a comprehensive range of life insurance and critical illness policies that are tailored to meet their individual needs and budget and more other insurance products. So we like to educate our clients before we actually talk about insurance. This is what we're doing by educating you about the finances, the whole aspect, not just insurance. So we like to educate clients on what assets mean and what liabilities are. Assets in a nutshell is whatever puts money in your pocket is an asset. Whatever takes money out of your pocket is a liability. That's the easiest way to explain this. So things that comes under asset will be things like your house, that's your property. If you own that property, you have a mortgage on it. Well, mortgage is still a loan, but if it's actually increasing in value, it becomes an asset. You have cash in the bank or savings or investment, those are cash, then stocks and bonds. Insurance is also an asset, and other intellectual properties. While things like debt, definitely we know is a liability. And then your car, if you have car loans, that's liability, taxes liability, credit cards, student loans, all of this comes under liabilities. So we actually advise clients to avoid debt because as much as you can, there are good debts, there are bad debts. Good debt are things like if you need to borrow money to buy a house, to invest in properties, or you have your own property, that's good debt. Bad debt is using credit card to go buy fancy things like clothing or jewelry. That could be bad debt. That could put you into big trouble, yeah? So we want to avoid debt as much as possible because upon death, your debt is actually transferable to your family if your estate could not clear it off. So money is a good servant, but a bad master. We like to look at 4 quadrants here. We ask our clients or educate them thinking, where would you be on your retirement? Would you be on quadrant 1, wealthy, or quadrant 2, financially independent, or quadrant 3, where you are still working, or 4, seriously broke? We'd like you to think about that. So here's a little clip I'll play for you. I hope this works. Just to think about, why do you need insurance? Why do you need insurance? And while we're playing this, I'd like you to actually think, why do you think you need insurance?
Felicity, just to say that I don't know if it's supposed to have sound. That was not coming through.
No, really, the sound doesn't really matter. As you
Right,
can see,
okay.
as long as you can see the, sorry, let's go back.
Yeah.
As long as you can see the, let's play that again. But can you see the should I say-
video? It was playing, yes. We just didn't have sound. That's fine.
But did you see the other text that came
the
out.
text, yeah, the pop-up text. I think we did
Okay,
see that.
right.
Yeah.
Hold on. Sorry, once I start the text, I wanted you, if you saw that those texts there, could you relate to any of this? Could any of you relate to any of this? Why are you thinking it protection insurance? Relate to any of this? Could you put it in the chat, please, if you do? Yeah. So why do we need insurance? For peace of mind, for a secure future, for help when you need that, for your loved ones and things that matter to you, that are all protected, for financial security, and also for assistance in case of emergencies. Those are some of the reasons, most reasons why people need insurance. I can't see the chat because I'm talking away. You can tell how passionate I am. I'm excited to be with you this evening. And so if people are really responding, Kenichi or somebody else, could you let me know people are responding in the chat, please? That really keeps me
They're very
fired.
much responding.
Yeah,
Yeah,
more fired up. Thank you very much. Brilliant. So here, protection gap. Protection gap is the difference between the financial protection that we should have or that you should have and the financial protection that you do have. So this measures how exposed you are to your financial risk. So some people may have insurance or have some protection, but is it actually enough? So what you should have and what you have, is it enough? So you may have some protection, but what you should have could be up here. So there's a gap in between. So we need to explore that gap. If you have protection insurance, we can still have a good conversation. If you don't have at all, we have more conversation. We'll have more conversation. If you have some insurance in place, we can still have a chat to see if there's a gap or not, yes? So the reasons people have gap is one, lack of understanding. You don't know what you don't know. Simple as. You don't know what you don't know. So people might think, oh, insurance is just life insurance or just buildings insurance or housing insurance. Some people are very good at when they're having a mortgage or they want to get a mortgage lenders tell you, you must have buildings insurance. And some people think they're so clever. They take out buildings insurance, and then once mortgage is approved, then they cancel it because they want to save money. I tell them, do you know if that house should burn down the next 1 month before you move in, you are required to pay back the insurance company that amount of money you owe them. And then they say, what? I say, yes, it's true. You still owe the bank that money. The benefit of having that insurance so that you're protected. So if the house was to burn down or to be flooded, the insurance will pay for it, not you. So lack of understanding, that's one example. Or people don't know more about life insurance. I'll talk more about the products later. But lack of understanding, they don't know what they don't know, or they might think they only need probably life insurance, not knowing the range of things, that products they might need. Number two is lack of advice. So people go online to purchase protection products. You go online, my son will say, if you buy cheap, you pay twice. You buy cheap, you pay twice, because when you go online, you're searching for cheap. You're not searching for what is actually the right product for you or the right protection for you and your family. You're going based on cheap. So you might come up, you might get cheap products, but what you need. Will they pay? I have seen many people purchase products online, and I've had to tell them, I'm really sorry, this is not worth whatever you're paying for. An example was a client who got insurance for £500,000 insurance. My colleague went to see him. He said, oh, I've got life insurance. You don't have to come and see me. So, okay, how much? He said, £500,000. Okay, how much premium are you paying? He said, £5 a month. Alarm bells went off. My colleague said, let me see your policy document. He said, no, I'm fine. I said, please, let me see your policy document. For your age, you're 40-something. You're paying £5 a month for £500,000 life insurance. Something is not right. If you took out this policy when you were 12 years old or 18, I understand, but not when you are 42. So the guy brought the insurance policy document to my colleague. The condition of them paying was he has to die of natural causes only in a public transport, which he did not read. He just went online and purchased cheap. Oh, 500,000. Oh, my colleague highlighted that to me. He said, oh my goodness, please, let me cancel this. Take a proper policy from you. So lack of understanding, lack of advice is not a good thing. Next is cost. 40% of people say that they will not buy life insurance because it's expensive. The other thing is it's expensive compared to what? I'll ask you. We say to people to reserve 5% of your incomes for your protection. 10% for your tithe, 10% for savings. I've forgotten the amount we actually, but 5% towards your protection insurance, because there's no point going to buy so many things. I have lost electricity, just so you know. I've lost. Give me a moment. Let me ask my nephew to put on generator. I'm prepared for this. So I've got put on generator, my dear. So he's gonna put on generator. We are prepared for this. So thank you very much. So cost, people say it's expensive because they don't do it because the thing is expensive. So I'm asking them, compared to what? How much would you pay for protection? They say protection or prevention is better than cure. So how much, when you pay for protection, you are actually preventing something from happening, because insurance is there to protect things or to prevent for when you need things. Because when things happen and you don't have protection in place, you pay more for it. So the expense, being expensive things should not even be a matter of discussion. It shouldn't come up at all. Now, the fourth reason there's a gap is inertia, unwillingness. People don't get around to doing it. They just keep, tomorrow, I'm thinking about it, tomorrow. I've had, my colleague said to me just a few months ago that there's a lady who she spoke to about insurance. She said, yes, call me tomorrow, call me next day. My colleague kept chasing this lady. The thing is, we shouldn't be chasing clients, but people think they're doing us a favor by chasing them, not knowing because we care for you, we love you. That is why we follow up, not chase, we follow up, because we know about your protection. We care about you. So my colleague kept chasing this lady for 3 months. Chased her for a month, gave her a break, chased her again, gave her a break. Then the final time she said, okay, you know what? This is the final time I'm going to chase her. Called her again. She didn't pick up. A week later, she saw on the platform that they were on together. Rest in peace, with the lady's photo there. And she just lost it. She just didn't know, but she had peace of mind because she knew that she has done her best to make sure this lady had protection in place. This lady died without insurance. She had 4 children. So that is the thing we say to people, it's best to get things ready. It's best to have insurance and not need it than to need it and not to have it. Am I making sense? Could you say make sense in the chat if I'm making sense to you? Is this making sense? Yeah, are you getting this? Kenichi, could you respond to me?
Yes, people are reacting. They are saying it makes sense. They are responding, and they're also using the reaction buttons. Very much.
Thank you very much. Thank you. Yeah. So now the importance of protection, of family protection, is insurance provides financial support and reduces uncertainties in business and in human life. It provides safety, peace of mind, and security against any particular event. So there is always fear of sudden loss. Insurance provides the cover against any sudden loss. Financial consequences of entire death. That's what we're protecting. Financial consequences of being diagnosed with critical illness. Loss of income, mortgage, future peace of mind of our dependents, of your dependents, your home, building and content, everything that is important to you needs protection. So I'm going to go to the next slide and then cover this one after the other. Is that okay? Is that okay? Say yes?
Yes, please go on.
The types of protection here, we've got one is life insurance. Life insurance will have two forms of life insurance. One is mortgage linked, the other one is standalone life insurance. Mortgage linked life insurance is you have life insurance, so you have a mortgage. Say, for example, you have 300K mortgage for 30 years. So your life insurance will be 300,000 for 30 years. And it will be decreasing. Hopefully your mortgage is decreasing. So your life insurance will be decreasing in line with your mortgage as well. So if the policyholder was to die halfway through the mortgage, say in 15 years time, and there's 15 years left on the mortgage to pay, and there's maybe 150K left on the mortgage to pay, then the insurance company would pay off the mortgage 150K, and the family will get nothing. Am I making sense? Yeah?
Yeah.
So that is how life insurance linked to mortgage works. Standalone life insurance works, as the name implies, standalone. So again, if you have 300,000 life insurance and your policy is for 30 years or to age 80 or to age 90, we can have insurance. We provide insurance up to age 80 or 90. 90 is the maximum we have insurance for. So if your policy was to age 80 and the policyholder was to die at 75, the life insurance would pay 300,000 to the family members. If the person was to die at age 81, they'll get nothing. Yeah, that's how it works. If you have a policy up to age 90, you will pay up to age 90. If you die at 91, you get nothing. If you have a mortgage,
Sorry for the interruption. I've just seen my chairman come on screen just to announce that you've got about 4 minutes left. Thank you.
No, I can tell you this is not acceptable because my presentation is 20 minutes. I've got 20 minutes. The other speaker took so much time. I'm going to do 20 minutes. Sorry, guys. 20 minutes is the time. I'm almost done anyway.
You've actually done 17 minutes. That's what I'm saying. You've done 17 already.
I've done 17 minutes. I'm almost done. Look, next slide is just examples. Yeah, I'm almost done. So
that's all right. Thank you.
So I've got 10 minutes left. So that's life insurance. Income protection is you have whatever your income is good to protect it, especially if you are self-employed or you have a business or you don't get sick pay from work, you have zero contract. Means if you're sick, you have illness, any kind of illness, critical illness or ordinary illness, or have an accident, if you don't have protection in place, it means that you don't get to work. Sorry, if you don't get to work, you don't get money. You don't get salary. This is where income protection comes into place. Sorry, I'm so hot right now. Even with the fan on, I'm sweating in Nigeria. Once I start being so hot, I'm losing focus. Right. Okay. So income protection is to protect your income. So whatever you're earning, if you don't have sick pay from work, take income protection. If you have sick pay, but it's for 3 months or 6 months or 1 year, you can still have income protection. It will just kick in after your sick pay from work finishes. Yeah. Then we'll have your retirement plan, pensions and investment. It's a different department in the company to handle that for you. Got private medical insurance as well. You know, private medical insurance, that's more so for those who do not like the NHS system. It helps speed up treatment, help you get some medication that you cannot even get on NHS. I have one of my colleagues, he's diagnosed with prostate cancer. The private medical insurance spends about £3,000 on him a month on medication, which NHS will not pay for. So it does help a lot. Mortgage protection is like your life insurance linked to mortgage or your buildings and content insurance, all of those under that. Commercial insurance, we do public liability, indemnity, all of those under that. Funeral insurance, again, is like life insurance, but not up to 300K, could be up to 100K, 50, 30, 50,000. That doesn't have an end date. While life insurance has an end date. Funeral insurance goes up to whenever. the person passes away. And also, I forgot to mention, life insurance pays on not just upon death, it pays upon if the person was to be diagnosed with terminal illness, where doctors said they've got 12 months or less to live, it will pay, or they were to die. Next is critical illness policy here. Covers things like cancer, kidney failure, heart attack, major organ transplantation, stroke, any illness categorized as critical illness, it will pay. So let me go quickly to some case studies. Let me go to this first. People like to say, I'll think about it. Thinking about it, there are clients we've had who are thinking about insurance, like one I gave to you example, she's thinking about it and then she died. Somebody else had this man had this big house in Manchester. My colleague went to him, he has 4 children, 1 wife, no insurance. The wife doesn't work because he was very comfortable. My colleague said to him, okay, if the premium I quoted you was too much, let me reduce it. But it is good to have something in place than nothing at all. He said, no, let me go to Nigeria. When I come back, I'll take the premium, take all the insurance. What is done for me? This guy is building the house, wanted to finish building his house in Nigeria. So this guy came to Lagos. A week later, my colleague got a phone call. Please, can we make a claim? My colleague was thinking, what do we make a claim? So for his insurance, the man was sleeping at the house he was building and slept off, he didn't wake up. My colleague said, I'm sorry to tell you, he didn't take up the insurance. I don't want to give you bad news because I've got news to share with you as well. So this is one of the bad news about people thinking about insurance. I can do more. Insurance do not pay. People say insurance do not pay. Let me show you where insurance pays here. Number 2, Dr. A, one of our brothers, one of my clients.
Felicity, I'm afraid that you are out of time. If you could just wrap up in a minute.
I'm wrapping up. Let me tell you, insurance pays. One of my
questions.
clients was diagnosed with critical illness. I personally helped him put a claim through. He claimed £70,000 or more for critical illness. He was diagnosed with leukemia. This was 2 years ago. He's well. I claimed for a family whose the house burnt down, a child died. I've claimed for them accidental death. My client, Dr. B, and his friend, I made claims for them as well. So just to end for you that it is best, these are providers that we have working with us. We have all range of providers, so we are whole of market. We're not restricted. It means that if one provider tells you no, we can work with somebody else to tell you yes. Yeah. So we also do trust service. I don't have time to go into. I would like you, if you're really serious about it, to put your name in the chat. Here's my contact details. I don't have time to go through all of this with you now. Take a snapshot of my contact details here and put your name and email address in the chat for me, or email me directly, or actually text me your name and email address directly so we can have a chat, have a one-to-one, and then get to understand your situation or go through the presentation for you again and then see what we can do. So thank you very much. It's been a rush and I hope it made sense to you and added value to you. Thank you very much.
Thank you, Felicity. There's loads of reactions coming from the audience as well as in the chat, and it seems like that one of your quotes have quite people have taken to it that it's better to have an insurance and not use it than to need it and not have one. So I've also seen it appear somewhere on WhatsApp. Thank you for that presentation. We'll take maybe just 1 or 2 questions now, but please do hang around. We'll have open up the floor for wider question and answers when we'll have the final presentation. So, Mr. Chairman, you're the first on the line.
Yeah, so thank you so much, Engineer Casey. And thank you so much, Felicity, for the presentation. I know your presentation is about an hour, but you managed to squeeze it down. So thank you. It's just because of the time. But obviously, I believe there will be some questions for you to take at the end. So I was just trying to say thank you for trying to squeeze it within the time that we have. Thank you. Engineer Casey, go ahead.
Yes, that was a comment. Does anyone have any burning questions that could not wait for the final presentation? If you do, please raise your hand using the reaction buttons and we'll give you the floor. I do have one. If no one, if no one wants to ask any questions, why is it that the language of insurance is always written as if it's made for people not to understand them? The example you gave about someone paying £5 because they did not really understand what they were paying for. Why is it so? It seems as if the intent is to obfuscate and not to clear, right?
May I repeat your question so that I understand it?
Go ahead, please.
May I repeat? Are you asking why insurance is written maybe in insurance technical financial jargon that people don't understand?
Yes,
what
more
you're saying?
or less. I mean,
As if
it's someone says written in tiny
written in
print.
tiny print. You mean
Yeah.
the tiny print? Well, banks is like a lot of financial institutions tend to do that, isn't it? The guy talking about credit score and everything, they also write in tiny print, isn't it? Yeah, they do. So I really don't have an answer for that. Is terms and conditions that probably there's so much. If they were to be printed large print, it may take like maybe a whole booklet. It could be too large. Maybe that's why it's in tiny prints. And also that is why you need a financial consultant to help you read the tiny prints, because honestly, I put my hand up. Before I became an insurance consultant, I do not read tiny prints. I'll tell you the truth. But until I became one, then I knew the importance of doing that. And I recommend everybody, not just for insurance, for anything you're doing, make sure you always read the tiny prints, really, because you will not have someone to guide you all the time. Credit card things you're signing, your mortgage things you're signing, always read the tiny prints. Even with your consultant, double check, please. Is that okay?
Thank you.
Yeah, even if you reach that, there are things you may not understand, then you ask people. Yeah, then we can interpret the financial jargons for you, but we're here to support you. They don't do it to spite you or not to pay, but it's just how it's written.
Okay. My question was actually because it does seem like most insurance products are designed not to pay out. I guess that's why there's a reason why they are notorious, even though
No,
you say that that's a fallacy.
No, that's not true. That's not true. They're not designed. They're designed not to pay. They're not designed not to pay out. Insurance companies in business to make money and also to protect you. And that is why I would say, when you go buy products yourself, you may not really understand what you're buying. But when you have someone with you, honestly, you can go and buy products yourself. But when it comes to making a claim, that's what I tell my clients, please, before you call insurance companies, call me. I will guide you on what to say and what not to say. As an example, a policeman said to somebody lost their phone. I went to report to the police station. The police lady was trying to help them. One of my colleagues, the police lady asked him, is your phone lost or stolen? There's a difference. When you report your phone lost, your phone stolen, there's a difference. How insurance would take that. Most insurance companies, yeah. So before you call insurance to make a claim for your policy, speak to your advisor. They will tell you what to say, how to say it.
Okay. I will take that as one takeaway from this section. Thank you. Engineer Wale, please go ahead.
Yeah, thank you so much, Felicia. I'll call it. I want to say you did an amazing presentation. Thank you. Well done. That was a good marketing. Just two questions for me. Now, first question is for people in diaspora, right? Can we take your policy from diaspora? First question. And second question is, how can we contact you in person after this presentation for more explanation? Thank you.
What? Here is my contact details. Can you take a screenshot? Can you see that? Can you see the screenshot?
Yes, we can see that.
My number is 079. I'll put it in the chat. 07985.
We can also see the contact details on the
Yes,
screen.
yes, great. So that's one way to contact me. Call me or text me. with your name, please, so that I can know. And then you asked how we can.
The diaspora. I think because you said you were in Nigeria, I think Felicity
So the
is
question is,
traveling to Nigeria. Yeah.
let me ask it again. The question is, people in diaspora, because I've gone to your site quickly and I noticed that you're in Nigeria. So do you take policies from people in diaspora?
I live in London. I'm just visiting Lagos.
You've not answered my question. Do you take policy from people in diaspora?
That's what I'm saying to you. Yes, we do.
Engineer Wale, Engineer Wale, she's based in the UK, in London. The business, Tavistock, is based in the UK. So
Yeah.
she's just visiting Nigeria. It's not like she's operating from Nigeria. Okay. So you can take policies from her.
Yeah, that's what I'm saying. That I live in London. I'm just visiting Nigeria. So you can take policies since you're in diaspora, because our company only operates in the UK anyway. But whatever protection, if you have insurance with us, and the person wants to pass away anywhere in the world, they'll still pay. Yeah. So you can come to Nigeria, even if you relocate to Nigeria, as long as you're paying your premium from a UK bank account, you're covered.
Okay, thank you very much, Felicity, for those. And you will all join me to give a rousing ovation to Felicity using the virtual reaction buttons. Thank you, everyone. And finally, thank you for your patience, Stephen. I do have to say that I've also worked with Stephen as he helped me get where I live currently. The floor is yours to discuss mortgages.
Hi, good evening, everyone. Can I just check? I'm loud and clear. Yeah.
Very much so.
Excellent. Thank you. I've never known group of professionals being this quiet. I was tempted not to really share my presentation because I would like as many people as possible to actually come on video. If you can, I really appreciate that. But if you cannot, that's okay. I don't bite, and I'm certainly sure that engineers work on a lot of principles. I was once an engineer myself, production engineer for that matter.
Right.
But we are not quiet people, and we are not shy people, to put it that way, actually. So show your face if you would, and that will be very, very good. You've been doing a lot of listening. I'm not going to bore you with I'm not going to add to your listening. As much as I want this to be quiet, I want this to be very interactive. This is your session. I'm timing myself now. I know I have 20, but I'm going to cut that short so that we can have time for Q&A. I enjoy when you bring your questions on the way. Right, I'm going to dive in. Thanks, Olu. Thanks, Felicity, for laying the foundation. Mortgage is a full circle. So we talk about credit. That's been covered comprehensively. Protection has been taken care of comprehensively. I'm going to dive straight into what we should know. And when it comes to this, a lot of this has been touched on during both of the previous speakers, especially with the credit, as far as when you go into having a mortgage, why would you want to leave your asset unprotected in the event of what if situation? Now, a full disclosure, everything I'm about to say, I'm not giving an individual a direct advice here. I'm just laying a foundation, something that will help you to make a decision on when you're going to get your mortgage, how you should have it, if it's something for you, okay? So that's all I'm doing. Should you require a one-on-one consultation, of course, my details will be shared in your various network group, and you can reach out to me. But what I'm saying to you is not about me. It's not about Vivid Financial Solutions, which is my company, but it's all about what you need to navigate the terrain when it comes to securing a mortgage. All right, here we go. First and first, credit has been dealt with, but let me add a little bit to that. Not something that's not been covered before, but something that is very important to life in the UK. Now, many Olu mentioned something at the very beginning. I made the same mistake. I worked with the wrong crowd. I was given the wrong advice. Spend as much as you can. It doesn't matter. I came in during the time when you can easily take a mobile phone contract from here, change the address, thinking nobody's looking, nobody's chasing you, as long as I take the mobile phone contract, move on to the next property, and they will send you a couple of letters, and that will be the end of it. Trust me. That is never the end of it. It's waiting for you right at the time when you need to make some financial decisions. A lot of mistakes over 20 years ago, a lot of mistakes we made. Our community is so rich in knowledge right now, especially in the space we are in the UK, that people like Olu, Felicity, and myself can come on board and say, wait, we have gone through this. We have walked this walk. Don't follow suit in the wrong side of things. This is why Olu is doing what he's doing extensively in the financial education. Felicity passionately speaking about protecting what matters to you. We might have, our parent might not have, we might not be privileged to this information, right? Or the system in Nigeria where, well, we're a bunch of engineers. By the way, I have some of my clients here that are non-Nigerians. You are also welcome. Some of my client friends, they are all on this as well. You are welcome. We still talk about jollof and the likes. I have a couple of my Ghanaian friends here. So the jollof conversation goes on anyway, but we got the, what's it called? Just on the side. Did she got the world record? That chef, did she got it for the jollof, largest jollof?
I think she did.
Yes,
She
yes.
did, yes, she did.
One
Proud
up,
of her,
yes.
yeah.
One up.
But we're professionals, so we avoid the jollof wars here. We don't do that here.
Brilliant. All right. So back to what I'm talking about. Okay, we have knowledge that we are all sharing with each other to ensure that we can do things in the way that will work for us. Don't turn your back on any credit. Let me touch on credit just from reference side of things, okay? Now, I see this a lot because of my space as a mortgage broker. By the way, just so you know, Vivid Financial Solutions, which is my company, is the only Black-owned mortgage brokerage in Scotland. So just so you know, for record, something we are very proud of, and we are doing well in that space all across the UK, by the way. Although I'm based in Scotland, HQ is in Scotland, but we cover the whole of the UK, just so you know. Now, what I see on a regular basis is all these utility bills that kills people's credit. When it comes to securing mortgage, especially for many people on skilled worker, entrepreneurship, people on some what you can classify it as limited leave to remain in the UK. If you are not ILR, indefinite leave, if you are not British citizen, which you have all the market available to you. If you are on any form of visa that limits your length of stay in the UK, you are only playing with a pocket of lenders that will consider you. And this is where the problem lies. When your phone contract, this is the trend I'm seeing is not people shying away from paying their debt. It's not people turning their back on their utility. You move from one house to the other, the rented house to another rented house. Probably your phone bill, your 3G or your gas and electricity send you your final bill. You've left the property. You might not know that you have to clear that bill. You might not receive the bill on time, but guess what? These things, once it goes on status 1 on your credit file, is making things difficult when it comes to mortgage. I'm so glad and excited the fact that a lot of people in the last 2-3 years, especially now that criteria when it comes to your length of stay in the UK have been relaxed. Olu mentioned Barclays, one of the biggest lender when it comes to mortgage, one of the international bank. They can do mortgage for people that just 6 months into the country. And we have other lenders as well, Skipton, Darlington, and I think we have about 4, even if not more, that as long as you have skilled worker, entrepreneurship, and something like that, and you are earning, they will consider you. But where the problem lies is you moving from one house to the other. You are not aware of your final bills. Some of you are aware of your final bill. You just don't have the knowledge to know. Do not leave it unpaid. The moment that becomes an S1 on your file, before you know it's S2, before you know it's S3, that's status 1. You've delayed or missed payment 1 time, twice in the period of 2 months, 1 year, 2 years. To start with, you've only been in the country for less than 5 years. You do not have enough track record when it comes to how well you've managed credit, and then you are now defaulting or missing payment. You don't want to default, but you are missing payment on silly things. That becomes annoying to me. I cry when I see genuine engineers like you guys earning a decent wage, maintaining everything, but simply from moving from one property to the other, there was a final bill that remained unsettled, or by the time you find out it's 3 months down the line, you've already been given status 3, and now you need a mortgage, and nobody is considering you. You don't want to do that. And how can you afford this? How can you avoid this mistake? One thing, make sure you always request your final bill and treat it like your life depends on it, to make sure you get that bill and you pay that bill. Okay? That's off your back. That's the first thing I'm going to say. Another thing, Olu mentioned this. Your credit file is your credit file. If you like, check it every minute. It doesn't reduce or increase your score. It is what it is. Okay, don't shy away from, oh, people says I shouldn't check on it because it's going to increase or reduce my, no. It's what is there, you cannot change it. You can improve it, you can damage it, but check it to know what's been reported about you. You will be surprised how many people don't even know what is a credit file until they are looking for a mortgage. I'm sure you might be saying, well, that's me. I'm hearing this for the first time today. Now, get to know what your credit score is. It is your financial report as far as the UK is concerned. You want to know what's been reported in that. Number one, it tells you everything that you know you have. And should someone else be doing something in your name, basically clone your ID, you can quickly see, wait, I don't have a credit card with Capital One. What's that doing on my credit file? I've never lived at that address. Why is that address on my electoral roll? You can quickly flag things up, raise a dispute, and sort it. Now, I'm spending a lot of time on that because like many of us, hand good jobs. Many of us plan finance. Many of us don't like to get into debt. But guess what? Those little missed payments here and there are just waiting to destroy everything you're planning for. Now, how does mortgage process work itself? The first thing is we assess your affordability. We want to know the lender. At my job as a broker, I'm whole of the market broker, like many other brokers out there. By the way, you can talk to your bank. They might tell you different things, but as a broker, like all my colleagues have alluded to, we work for you, not for any of the lenders. So we give you the best advice as to what is best for you. We do not have one single product, multiple products to allow us to say this is what's best for you, go by this. Now, first thing is affordability. Your affordability looks at your income, your expenses, your things that you are committed to, and your credit overall. The bottom line, as Olu mentioned initially, 30, don't go above 30 when it comes to credit. There is something called debt to income ratio. So debt to income ratio is the one, it's the statistics to basically, you want to spend 30%, you don't want to spend more than 70% of what you earn. So that is the 70-30 rule. So you don't want to spend, the more you spend, the higher your debt to income ratio. So you want to, I think the general rule of thumb is you should be less than 30%. Your debt to income should be less than 30%. You don't want to go above that. So simply, what you earn, what you have committed to, take all that into account, and how well you've managed the little credit you are committed to will give an indication of what you can borrow. Now, everyone, you can do this simple assessment. Multiply your gross annual salary by 4.5. So if you earn 25,000 a year, no, let's say, I can't think math too much right now. Let's say you earn 20,000 a year. That's your gross before tax, not what goes into your bank. Your employer says your annual salary is 20,000. Multiply that by 4.5. Technically, you should be able to borrow 90,000 when it comes to mortgage, right? But then we are factoring in how many dependents. It could be adult dependent, it could be a child dependent. How many people do you feed? Are you responsible to financially? What do you have on credit? A car finance of 10,000, a credit card of 5,000, balance, a personal loan of 1,000. All those will reduce what is available to you, provided you are maintaining a good repayment strategy. You are not missing payment, okay? So by the time we take all that into the equation, it determines the end result of that is what we call your decision in principle. You earn 20,000, you should be able to borrow up to 90,000, but because of X, Y, Z, you only have 50,000 left to you. So that is affordability, and that is the simple way to calculate it. The next process from there is you look for your home. When you know how much you can borrow, it allows you to plan for, can that get me something that you are looking for, and so on. Now, one more point I'm going to touch on before I stop. and allow for Q&A will be this. Deposit. I'm flogging this because this is a Nigerian community event. Now, when it comes to your mortgage deposit, this is very, very important. It is expected that your mortgage deposit is coming from your salary savings. Either you are disposing of an asset, you have a car, you are disposing of the car to raise money for your mortgage deposit. So these are the two key areas it is expected that you raise your mortgage deposit, okay? Now, you might have a gift from friends, from family. Now, Olu talked about criteria earlier. You know, when you are in the whole of the market like myself, you understand very quickly. The moment you tell me XYZ about you, I know which lender should be positioning you with. Criteria, that so wild. You might have, trust me when I say this, you might have S3 on your credit file you might have S3 on one account, that is status. You've missed payment on one single account 3 times in 12 months. If you are on a skill visa, you might not have a lender that will allow you to borrow. However, if you have indefinite leave or you are British, you might have a lender that will consider you, but the rate might be higher. So this is where the criteria and all that comes into. So what am I saying? When it comes to your mortgage deposit, largely your savings, you are disposing of an asset that is legitimately yours, or you are being gifted funds from family and friends. I'm going to say this because it's something that is big within our community. Some of us do Osusu, contribution, and whatnot. That is a no-no because it's unregulated savings. I could take my collection of 20K, 20 of us doing 10,000 pounds, £1,000 a month. It's my turn. Technically, I'm owing 20,000. So it's 20 of us. I've taken 19 from the rest of you. The bank will see that as that is the money you've bought. That is an unregulated contribution. You cannot take that money and present it to the bank and say, this is for my deposit. If you are taking such money, everyone involved has to write a gift letter. They need to say they are gifting you. This is not, I'm borrowing you, because if it's a borrow, that means if it's a loan, then I need to factor that in as a loan that you need to repay, which will further reduce what you're looking to borrow. We do this in our community, and this is what I'm going to leave here as a gift to everybody. If you do contribution, bear it in mind in your group. We should be ready to provide a gift letter. We should be ready to provide our ID. We should be ready to provide our bank statements evidencing the source of that 1,000 or whatever amount you are giving to. You know within yourselves that this is a contribution. It's going to continue to give us its own £1,000 a month for the next 9 months. But for the purpose of this mortgage, you've got to say we are gifting. It's got to be gift. We are gifting our friend, our brother, gifting you this money. Write the gift letter. I've seen many cases, despite me flogging it to death to say, you guys are doing this. It's got to be a gift. When it comes to the individual coming for mortgage, some people are backing up because they cannot evidence their source of £1,000 a month. And what was happening was some people are bringing money in from overseas to pay their monthly contribution. So when you ask for the evidence of this is why you anti-money laundering, you follow the money. It's as simple as that. Going to the origin of the money. Cash deposit is a no, because it doesn't leave any trace. So these are the simple knowledge I'm going to give to you. I'll leave this here, and I hope I've been able to touch on a couple of key things. Number one, you cannot overlook your credit. It's waiting for you. Number two, when it comes to savings, you need to make sure you work it right, either through your Osusu, through your contribution. Now, when it comes to savings, can I leave this here right now? If you are under the age of 40 and you haven't acquired a mortgage in the UK yet, but you are here, can I plead with you that before the end of today, open a lifetime instant savings account? This is the savings account that allows you to put maximum of 4,000 in any single calendar year. That is from whenever you open your account, basically. From October till September next year, that's a 12-month period. Maximum you can put in that account is 4,000. And if you do so, you will get 25% on top of that. Now, you don't need to put 4,000 savings in there. If it's 1,000 you manage to put in a year, you still get 25% on top of that. You haven't gotten a mortgage yet, you are planning for it, you are under the age of 40, open a lifetime instant savings account. I will stop here. Thank you for listening.
Thank you very much, Stephen. And thanks for keeping it short. Really appreciate that. We have a couple of questions and we have lots of reactions as well. So, while I'm getting the questions, let me say my own personal experience about some of those nagging little missed payments. I had a gift contract about a couple of years ago, and it was £5. And I had an Amex card, an American Express with thousands of pounds in it, and those minimum payments that you had to do. I think I just got the card. I didn't realize I was like it was £5. So I didn't pay it. Amex already paid gift, but I didn't pay that £5. It was on my credit report for ages, following me, punishing me everywhere. And the other thing is with moving houses, I can also relate to that. When we moved, I forgot to change my car registration details. I think I had done everything, done my license and everything, and it was a double tragedy. We got somewhere, the parking machine was broken when we just moved, and then we kept going there, the machine was broken, so we just took it that each time you go there, you don't have to bother with parking. They fixed the machine, and then we got parking tickets, and it was sent to the old address because that's where the vehicle was still registered. We didn't know, and then after sending a couple of warnings, it went to the bailiff guys, and then the debt collection, and as you know, the rest is history. Completely destroyed our credit history, and the report was really bad. So I've seen Olu has posted as well as Steven. There's check my file. There's a link there. I think you can use that to check your credit report. So does anyone have any burning questions they want to ask? Otherwise, I'll pick up those that have been posted in the chat. Does anyone, if you have a question, please, Sandra, come in.
Thank you very much. Thank you, presenter, for this wonderful presentation, all the presenters. My question is, if you have a mortgage, let's say you have a mortgage with a particular lender, is it possible to switch lenders? That's my question. Thank you.
Good question. Now, a lot of the lenders will allow you to switch. Number one, you want to find out what type of mortgage product do you have. So you have fixed product and you have a number of variable product. If you're in a fixed product mortgage, basically a fixed means you have a specific interest rate for a period of time, which could be 2 years, 5 years, 1 year, whatever it is. Now, check your mortgage offer. There might be a condition that you can switch to a different lender if you're on a fixed. However, there is something called an early repayment charge, so that you will incur if you choose to pay off us off earlier. Now, however, if you have a variable mortgage, then you might have the one that you can walk away at any point in time, especially if it's you have a lot of tracker that you can walk away. You have a lot of variable, just your standard variable. The base rate goes up, it goes up, it goes down, it goes down. So just check your mortgage illustration. But yes, largely, you are not tied to a specific lender for the rest of your life unless you have an adverse credit. That means you are mortgage trapped, as we call it.
Thank you for that concise answer.
Can I just add a
Sorry,
quick,
go on.
a quick
Sandra, you
follow-on?
wanted, right?
Yes, please. So at the end of the contract, let's say a 2-year or 5-year fixed term, can one switch at that point?
Absolutely, yes. So your mortgage broker should have made you aware of this at the very beginning to say you are locking for 5 years. Towards the end of that 5 years, I will be in touch with you to look again, consider your circumstance. You want to buy another house, you are still staying where you are. Let's look for another deal, because if you don't do that, you're going to end up on a higher variable rate. So yes, it's possible.
Okay. Does that cover it, Engineer Sandra?
Yes, thank you very much. I appreciate it.
All right, thank you. Benga, over to you. Benga, are you ready? Go on, please.
Yeah. Thank you for the detailed presentation to all the presenters. So my first question was regarding, Mr. Olu mentioned the fact that if you're looking for mortgage and you go online to search for different deals, and just because you've approached like 6 different brokers, and then that comes up on your file, and Experian will not tell them the outcome, right? So what's the best approach if you're looking for the best deal? How can you avoid that pitfall of, having multiple searches coming up on your credit file? Then the second question is regarding the mortgage. What determines the deposit amount you have to, deposit for a particular property?
Yes. So for mortgages, my advice is speak to a mortgage broker, because like Stephen said earlier on, if you've got this issue, you can tell Stephen, okay, this is my circumstances, this is my story, so that Stephen now knows where to look at and he's got the best information to look at. So when it comes to mortgages, speak to Stephen. I'm sure I'll be happy to help. It's when it comes to credit card or to a loan, Experian, Credit Karma, they've got I've forgotten the name of the product, but it tells you what you're eligible to. So it tells you you're 100% eligible to this £500 credit card. So that is one of the products that you can use. And I think the next question in terms of deposit, I think I'll pass that to
thank you very much. On the mortgage deposit, it depends. This is where criteria comes in. If you are ILR, British citizen, European settlement scheme, you might actually be able to get a 0% deposit mortgage. Some lenders offers that, but minimum is 5%. Minimum, at least for the standard across the market, is 5%. Again, it's so vast. But just let me give it umbrella. You can, if you are British citizenship or you have indefinite leave to remain, minimum 5% deposit should do it for you. However, if you're on a skilled worker visa and all that limited leave to remain, largely is 10%. However, because I'm open to the whole market, I have a lender within my panel that allows you to come up with a fight that we offer you a mortgage deal on a skilled worker visa or limited leave to remain with a 5% deposit. Of course, the higher you borrow, the more interest you pay, but that opportunity is available to anyone with a skilled worker, limited leave to remain. That's the umbrella for that category, but you only have 5% deposit. You still need to meet a number of criteria. Which one of them is a credit rating?
Thank you, both of you, for those answers. So I have a couple of questions. Chairman, I'll come to you in a moment. I think you raised your hand first. Let me just pick one of the ones that have been posted in the chat, and I think this one is for you, Olu. This is some credit scores are measured on a scale of up to 710, while others are measured on a scale of up to 999. I guess Experian is one of them. What's the difference?
Each company has got its own way of calculating the scores. So, but at the end of the day, it is the report. What is in the report is most of the time is 99% the same. So, that's why we say check every single one just to make sure that you're on the right track. So I've put a link there. Check my file. It's I think it's one of the free ones where you can check your credit report over 3 different credit bureaus. It gives you the best one. So funny enough, Experian score is going to change. It's going to go to 1,250 very soon. The reason why is because it's been on 999 so many years ago, but new things are coming into the market. New variables are coming in. So check all of them. Check all of them and check the report, because at the end of the day, it's almost like when your child comes in and says that they got 79%, you're thinking, okay, where did they do well? Where can they improve? So it's like, check every single thing that's inside the report.
Can I quickly jump in on that as well? Sorry, before we move on the credit. By the way, sorry, Olu, I didn't see the credit that you had shared that initially. Remember though, if you've never used the Check My File before, if it's your first time, you have maybe 28 days free. But post that, you're going to be paying for it. If you had used it before and you are trying to go on it, it's going to ask you to charge. Now, and what is important on the credit factor when it comes to the mortgage side, so you know, Your score doesn't determine how much you can borrow. It's the report within, as Olu mentioned earlier. You could have 999 over 1,000. That doesn't mean you can borrow nothing. It doesn't mean anything. It's all about, that just tells us you are managing everything, but it's not an indication for how much you can borrow. Now, the reason I'm saying that is a lot of clients will say to me, well, you are saying my income can give me 90, but my credit is high. Can I go away and come back in 6 months because I would have worked on improving it? That's not going to go anywhere. It's all about what you earn and what you have committed to.
Okay, affordability comes staring us in the face again. Thanks for that. I'm aware that we've not really heard from Felicity. So I have a question that I think is addressed to the three of you. A couple of people have asked the question about bringing money from Nigeria. If you bring in money from Nigeria from legitimate sources, how do you do it? And what documentation do you need to prove that, those are legit? Let's hear from you first, Felicity, before the rest of the panel. Thank you.
Depends. If you're bringing money from Nigeria and you don't know what to do with it, I can give you my bank account. I just thought I'd throw that one in, sorry. So bringing in money from Nigeria, I've had a few cases where people have brought in money from Nigeria to buy properties. As long as there's a record from the account in Nigeria, whatever business the person is doing, there's a record to show how the money was, accumulated, that should be fine. Yeah, and if you're going to work with a mortgage broker, say if you want to buy a house with that money, it has to be with somebody, let's say a brother, who understands the business. If you go to a white man, they won't get it. They might tell you it's money laundering and run away. So we have a brother here who can assist you with that. Yes. So that's why it's good to work with our people. Let us work with our people. Stay, let's keep the money, let's keep it moving amongst ourselves. That's what other people do.
Yeah.
So you can still bring in money into the country to buy a property or to buy anything, as long as there is a trail of that cash.
Thank you.
Allow it.
Thank you. Any other takes on that?
I'll pass on to Stephen.
Yeah, when it comes to if you're gonna use this money for the purpose of mortgage, thanks, Felicity. That's nail it in the head. Now, when it comes to in the UK, you first of all you want to make sure the money is in 6 months before you need that money. Now, I'm saying that with a caveat because from the mortgage side of things and from the solicitor side of things, they can ask you for your last 3 years bank statement. The rule book says follow the money until you are happy with the source of fund. Now, this is why what Felicity says stands, okay? It doesn't matter if it's your funds are a year in the country or 1 month in the country. It's got to be a legitimate money that you can show the trail all the way. I've done mortgages for folks bringing money from overseas. This is not just Nigerian factor. This is globally. Anyway, any money that is coming out of the UK, you've got to show the trail. What is this money? The same question we ask you if the money is coming from the UK, the same thing we want to say when the money is coming from anywhere else in the UK. So show us the path. Your brother, your uncle, or is you're disposing of your property in whichever country, an asset, that is what you are disposing of to raise this fund. Show us the title deeds that tells us you own that property in the first instance. You owe nobody any dime on that property, and show us how the real estate. So this is why I say to people, this is not, I'm going to sell my property for 20 million and they're just going to dump the 20 million in my bank account. Let it go through the regulatory bodies, the solicitor, conveyancing, the bank taking in that money. It doesn't matter, a year, 2 years in the country, I can ask for us. I go as far as I need to go to make sure I'm happy with this fund, and so is your solicitor, okay?
Thank you for that. Apologies that we are slightly running over time, but I think people do want to hear these answers and have their questions answered. Mr. Chairman.
Okay, thank you so much. Thank you, all the speakers, for for this wonderful presentation. I've got like 3 questions, and I'll make it quickly. For Felicity, if you are self-employed or you're working for yourself, what are the maybe 1 or 2 insurance that you would advise that the person should take? So that's one for Felicity. For Stephen, I want to ask, as a follow-up to that question on bringing money from Nigeria, how would you advise it's best to transit the money from Nigeria to the UK? Should it be transferred via the bank so that it could be traced, or I could sell the property in Nigeria or get an asset disposed in Nigeria, and I'll tell somebody to bring the money for me and I'll put it in my account in the UK? So how best would you advise one does that? Then the second mortgage question would be, I know some people who come to the UK maybe at a later age. At what age do you think you would not advise somebody to really go and get a mortgage? Is there an age you would say somebody should go for mortgage? Thank you.
Right. Okay. I've actually forgotten my question. What was my question?
So the question is, if you are self-employed or you work for yourself, what are the 2 insurance that you would advise that the person gets?
Well, it depends on your circumstance, but if we go for just your work, will be income protection. Income protection, if you're self-employed or you have 0 contract, you need to protect your income. So income protection pays up to 60 or 65% of your annual gross income. So if maybe you are earning, let's say you engineers earn a lot, like £60,000 or £100,000 per year. So your gross income of 65%, say let's use say 60,000 times 65%. So you'll be insured up to for 39,000. That's per annum. Divided by 12 will be, you can get a cover up to 3,250 per month. That's what you can insure yourself up to. So if you have any illness, whether it's critical illness or any kind of illness, or you have an accident that means you're unable to work your occupation, to perform your occupation, you can claim up to this amount per month. You can last you for up to 12 months, 24 months, 5 years, or to retirement, depending on the package you have taken. Then we can look at, depending on your circumstance, we can look at other things you can benefit from, but for work specifically will be income protection.
Okay, should I take the floor? Is that your Felicity? Yeah, you're true. Okay, now at what age would I advise someone not to? I suppose it's all, even you could be 20 years old and you might still not want mortgage. Taking on any financial commitment has to be an individual decision. I've come across a lot of people that are arguing with me, mortgage is a no, they would rather be renting. It's not a matter of yes or no. You've got to make this decision for yourself. You might be earning good money, but however, you might just prefer to be renting. Now, I have a different school of thought on that one. Okay, you could be renting for 10 years, paying £1,000 a month. In 10 years, if you are living that property, you are walking away with nothing, just your bag if you're lucky, and maybe not even your deposit. However, if you could and you get on the mortgage property, that £1,000 a month will give you something back in 10 years if you are to be disposing of that property. That is where my argument lies. When it comes to the age, of course, when you are nearing retirement, probably that's not the time when you really want to be getting yourself into a massive financial burden. Now, even if you are 30 or 40, one of the financial advice I give to my client is this. If you are coming to take mortgage as a couple, you want to make sure one of your income can sufficiently pay off your mortgage, if not the rest of the family bills. You want to make sure you give yourself a buffer, a slack. Now, when you start eating into both of your income combined, is your mortgage is taking 1.5 of your family income, you really want to think twice on that one. So it's all about you. What we will give you the advice, tell you maybe your pros and cons. In fact, earlier this year, a client came to me, was looking just to buy a property of 35,000. The property was 60,000, very small apartment, but he can actually pay that property off cash. However, he was considering securing a mortgage on that one. My advice was, you have the money, you're already 62, you have the money, we can still get you mortgage to the age of 75. You have the money, please go and buy it cash. He listened to me and he yielded that. We will give you advice for you to make the right decision. But the rule of thumb for those that are not even over a certain age, make sure one of your income can sufficiently cover your mortgage. Best way to bring in money from overseas. You know, we are going to scrutinize every penny. It doesn't matter what country. Make it through the bank. Even using money transfer sometimes, I've seen a couple of issues around that. But as much as possible, let the trail be from bank to bank to bank to bank. Don't tell any friend to bring in money from you. And do not put cash in your bank account, especially when you are planning for a mortgage. That is a red flag.
May I add to that, also ask a question? When you say put in the bank account, there's a specific bank that wouldn't query, and how much can they put at a time? Because somebody have complained they put in 5K, the bank was closed. So is that a kind of bank? What kind of banks could they use to transfer money, and how much could they put at a certain time?
I know a particular high street bank that doesn't like people from a certain country, Nigeria is one of them, bringing in money, seeing frequent activities. And Barclays, by the way, is one of those banks. They will just write to you, we are closing your account for no reason. We don't like your business, just move on, okay? And so there is something called, I think Olu will know this, CIFARS or CIFARS register, right? So to that bank, you haven't done anything wrong to other bank, but that bank will not entertain any business with you going forward. You are moving money, could be legitimate money or whatever, but it just doesn't fill their risk profile and they will not like it. So when it comes to how much money, I know of clients that I've brought into the country. In fact, one of my clients is on my neck right now. I've told her I can't do anything right now. With over 12 months, they brought in 200,000 into the UK from overseas. The bank might not be saying anything just yet, but trust me, they look at every penny that comes in. So, and some other folks, it might be regular £1,000 every month coming from a particular country, and some banks don't like that. So I can't really say what is going to be the minimum or the highest. It just depends on who you bank with, because they have their own risk factor that they look into. Maybe Olu might want to jump on that.
So I totally agree with you. Bank to bank, that's the best option. The exchange rate may not work fine for you, but at least there is an history. So anti-money laundering is big in UK, and I think because banks get sued for anti-money laundering also. So for the banks to cover their case, that's the best case. So I know one of my friends that was doing cash exchange, so i.e. £100 sent to Nigeria, you give them, and literally they just close the blank account because they were like, so many random people were putting money from different places into. So like they said, they don't even, sometimes it would just be one letter, sorry, we're closing your bank account. And also those kind of things can affect your credit report because because now the bank has been flagged. So, and what happens, like, let's say Bank A, you want to go back to Bank A to open your bank account, they'll be like, oops, sorry, we've got this in our record that there were some suspicious activities going on in the past. So that, my friend, they had to stop that side business. Even though they was making money for them, they were getting good money out of it, they had to stop that. So the best case is literally bank to bank, just because of that extra scrutiny that is on the money.
May I also add to that. I would suggest, now that we have some Nigerian banks that also have UK branches, so before you make any transfer, to speak with them, the bank in Nigeria and the bank in the UK, or your bank in the UK. If it's not in Nigeria, we've got this Zenith Bank, we've got Access Bank, we've got GT Bank as well. So please speak to both parties to know what the rules are for bringing in money before you do.
Okay, that was thoroughly thrashed. Thank you very much. Engineer Wale, thanks for your patience.
Yeah, thanks. So again, Vivid Financial Solution, thank you for your presentation. That was an amazing one. Just one question for me. So you said something about lifetime ISA. So you said if you are under 40, what happens to people above 40? Are you saying people above 40 can't put money in lifetime? Because I know the amount you can invest in the UK, I think is 20,000, right? So you can put some in lifetime ISA, you can put some in stock and shares, you can spread them. So can you explain that more, please? Thank you.
Thank you for that question. So you have lifetime instant savings account. You have instant savings account. And your instant savings account is open to anyone for whatever reason. You have a property, you don't have a property, whatever your plan is. It's just a instant savings account. And that one you can diversify into stock and shares and whatnot. That's the one that has a maximum cap at the moment, tax-free of 20K. Now, the lifetime instant savings account, however, is specific for, well, it's there for two reasons. Number one, you are planning a mortgage, you are under the age of 40, or it's a retirement pot for you. So those are the two reasons, because if you're over the age of 40, sorry, your ship has sailed to instant savings account, where you just get your normal interest on that one. Remember, the incentive on lifetime instant savings account is the 25% top up that you get. That also forms part of your 20,000, by the way. So if you have 4K in your lifetime instant savings account, you cannot add more than 16, the balance, to your instant savings account. So those are the two different. I hope I'm able to clarify the lifetime instant savings account. If you're over the age of 40, well, you can't open that for the purpose of mortgage. It's going to be to retirement, because your solicitor will be involved in you taking out that money. You can take that money out at any point in time, by the way. If you could open it, lifetime instant savings account, you can withdraw that money at any point in time if mortgage is no longer a thing for you, but you will not get the top up.
Thank you.
Thank you, Stephen. And I will have just two more questions that can be answered in any order, and then we'll call it a day there. So someone asked, if you're currently on a part-time job but have been on a full-time job for like a year in the past, how will your current status affect getting a good mortgage? The second question was about a partner's income. Can your partner's income be factored into your evaluation or deposit if you're doing a sole mortgage?
Okay, so whatever your income is at the moment, that's what we're going to use for your mortgage assessment. You've been working full-time, earning 50K a year, and you are now part-time, 25,000 a year. We look at your last 3-month pay slips. Whatever that gives us is what we're going to use. We're not going to use your past record, because your last 3 months reflect your current financial strength. When it comes to if you are looking for a single mortgage, basically, for whatever situation, you are Mrs. or Mrs. and yourself, you want to go for your mortgage solo. Now, if it's a guarantor's mortgage, someone else can come to be part of that mortgage with you, but they will not be on the title deeds. So it's called joint application. So guarantor's mortgage, anyway, JSOPS is called joint applicant sole proprietorship. There is only one person that owns that property. However, the other person is a guarantor that if you default or fail, the bank is going to come after them. But you cannot, if your question, if I can visualize it correctly, I want to go on the mortgage, but my wife's income, we're going to use it, even though she's not going to be on the income. No, that will be a no, unless she's going to have to be on the mortgage one way or the other. Either you are doing it jointly, or she's forming your guarantor, which at that point in time, the bank will be asking you the question, why guarantor's mortgage doesn't come from your partner. It's usually brother, sister, family, mom, dad, and so on.
Thank you. That was very comprehensively dealt with. The other one, we had just a question coming in the chat about if you have investments or stocks, if your portfolio can be considered in your evaluation for a mortgage.
Yeah, so I believe when you say evaluation, you are meaning your assessment, affordability. Yeah, if you have, we need to get the figure. Of course, it's got to be an investment that is registered within the UK, within the UK regime. If it's an investment from overseas, and we still need, there is something called an haircut. If you are earning from abroad, like those UAE and whatnot. There is a different criteria for different lenders. But in short, if your investment is in the UK, we look at the value, what is it going to give you? And the bank might insist that, well, move that money into your account, move that, sell it and move the pot. So we know what you're going to have. Now, let me say this when it comes to deposit. Whilst it's good to make sure you have your deposit on ground before you go into mortgage, if you are ILR or you are British citizenship, for me as the broker, the honor is on me to make sure I've seen your deposit if you are British citizen and that. Now, if the bank wouldn't ask me to produce the evidence of your deposit upon application. If you are not in that category of British citizenship or ILR, the bank will insist to see your deposit. So at that point in time, so the bank in this case, as long as if you're telling me this is my stock is 20,000, that's where my deposit is coming from, that might be enough for me to do my work if you're a British citizen. But you need to make sure that you still have that money come that time. If you do not belong to the British citizenship category, you need to convert that money in your bank, and I need to present that to the bank to say, this is where your deposit is coming from. Okay, thank you.
Thank you very much. And again, sincere apologies for overrunning. There have been requests for your contact details. Please do post those in the chat. I know Felicity will send yours, and I think we've seen your email as well, Lulu. Stephen, please do share your contact details in the chat. And that brings us to the end of the session today. You would please join me in giving our presenters a very, very standing ovation. Thank you. Mr. Chairman, over to you.
Wow, wow, wow. Thank you so much. I mean, it's been an interesting session. I mean, the attenders have been consistent right from beginning to the end. I was thinking maybe people will start dropping off, but I think we've been having engaging presentations. So before I say the final thank you and drop off, I'll just want to use the opportunity again to share our forthcoming activities so that our members can also, pardon me, I will share my screen and just to go on and then I'll come and give a final thanks. So if you can see my screen again, just a quick one. We're having this following, okay, yeah. So next Saturday, 10 a.m. in the morning, we'll be having a webinar on navigating master's program and scholarship with growth mindset. This is a collaboration program between our branch and the International Relations Committee of the Nigeria Society of Engineers HQ. So keep it a date, and also the Young Engineers Forum, and the coordinator for that is Engineer Daniel O'Malley. So please make it a date. It's going to be an interesting one. And our speaker is just Engineer Kenichi, who just coordinated this program. And then we have a technical visit to visit the National Engineering Laboratories. That's on Thursday, 16th October, 1 p.m. to 3 p.m. And this will be beneficial to our members to expose us to technologies about flow measurements. And obviously, we know this is applicable to oil and gas, water processes, and all that. So please keep it a date. And then the following date, we're going to have the Career and Immigration event in Strathclyde University. This is a physical event. We have confirmation from British Army's BAE Systems and an immigration consultant. So come there and get information on how to navigate the ever-changing immigration landscape in the UK. I believe you'll be able to benefit from that. And then lastly, the big one in August, from August 6 to 8, 2026, next year we'll be having our UK Engineering Conference. So keep this date in mind as we go along. So on behalf of members and EXCOs of Nigerian Society of Engineers, we want to thank you, Felicity Okolo. We want to thank you, Olu Alabi. We want to thank you, Babatunde Stephen, for your time today. I mean, the information which you have given us has been quite beneficial, I believe. I know different of our members are in contact with you guys. Felicity, I've been in contact with Felicity, and she's done one or two things for me. So yes, these are people we believe are able to help you if you need. And if you guys don't mind, which I believe you won't mind, we'll probably just circulate your details within our WhatsApp group. And if anybody wants to reach you, they will. I think for our student members, they will be very much interested in the credit rating to understand it, because just like you said, a lot of us, when we first came to the UK, there was talk about credit rating. We didn't understand it. And a lot of us jumped into, just taking credit indiscriminately. So yes, we want to thank you for that.